Now, let me briefly, because I've taken too much time, talk about some of the future challenges, particularly for some of the big players in the trading system, because we want to think through what has to happen. Firstly, in the United States. In the short run, the U.S. has had an impressive fiscal expansion, not as big as many of us would have liked to have seen, and the Federal Reserve has also liquefied much of the economy. The real conflict for the U.S. is how to get from this short-term situation where the government is spending huge amounts of money to a long-term situation in which fiscal stability is restored. How do we make the transition over time? You know, at the moment, since there is such a strong argument for government expenditures and for tax cuts, it's a great time to be a politician, actually, because we can do everything, and we're trying to do everything. We've got healthcare initiatives underway, we're building infrastructure, we're dealing with environmental questions, sponsoring research and development, and giving tax cuts. So the government is active across the board, but it can't last. It cannot be sustained. Already the financial markets, what they call the bond vigilantes, are starting to raise long-term interest rates. Already there's a concern, perhaps, that the government may try to inflate its way out. I happen to think this is an exaggeration when it comes to inflation, but nonetheless, it's a pressure that is already being felt. So how do we make this transition? Well, what is going to replace government demand in the U.S. economy? Where's it going to come from? Housing? Depressed. Investment? Our capacity utilization is at 65%, an all-time low. Why would you want to order new equipment? Consumer spending. That was what always drove us. Well, consumers have seen their wealth fall. Their houses are no longer worth what they were. Their equity positions are no longer worth what they were. They have to save. So where do we get our demand from? In my view, one component of that recovery over the medium term has to be exports. And we're, unlike many countries in the world, we're used to not thinking about our international competitiveness. But I think the United States is going to come to a greater and greater appreciation of how dependent it is on exports as a potential source of growth. Now, how do you generate more exports? There are basically three ways. One, you have your currency weaken. Two, you get more competitive and more productive and efficient so that people want to buy your goods. Or three, you lower the foreign barriers to your exports. And I think the U.S. is going to try all three. And so the prospects are that as we get this adjustment in American expenditures, we could well see a significantly weaker currency for the medium term if we think at it from an American adjustment perspective. EU, I don't want to talk a lot about it. It's quite divided, but under huge stress. Even more difficulties in coordinated action, certainly than the U.S. Central and Europe have many of those countries. Latvia currently under huge stress to retain their currency with the euro. But many of those countries have been on sort of classic spending binges and basically keeping the German economy going. And so they're retrenching. And so some of the surplus countries in Germany have to stimulate their own economies as opposed to depend on that external demand. So broadly, what we can expect is that these big developed country blocks, both the United States and Europe, are likely, they'll recover, but they're likely to have slow growth for quite a while. China is the other big engine. And its orientation now is increasingly towards an internally driven economy. And that's with their impressive fiscal reorientation, also increasing social spending. and increasing infrastructure spending. So that's a mixed picture, actually, from the standpoint of countries around the world. The bottom line, it seems to me, is that the countries that, the exports that have been dependent on supply chains that ended up in the US and Europe are going to do poorly. The ones that sort of terminate in China may well do okay. And I think that's actually much more very sophisticated capital goods, which the Chinese don't produce themselves, on the one hand, and primary commodities on the other. And so I actually think if I were sitting in Australia, I would say we're likely not to have the kind of growth we've seen in the past, but it is a world economy that doesn't look as bad as many might suspect, precisely because of these underlying drivers that are coming from the emerging markets. The emergence of the middle classes in India and China are the key factor, it seems to me, in generating growth in the global economy. Let me finally just touch on the trading system. Doha is the immediate item on the agenda. People are a lot of people are pessimistic about Doha. I'm slightly more optimistic. Doesn't mean to say I think we're going to get it immediately. President Obama did run on a more protectionist platform than we've seen in other presidential races. Hillary Clinton wanted a timeout from international trade agreements. But I've actually been impressed that Obama has backstepped away from his commitment to reopen the North America Free Trade Agreement. And the special trade representative has announced his willingness to join the negotiations seriously in the Doha round. That doesn't give us an agreement, but it certainly does give us an America that is participating in this arena. In fact, if there's one theme of Obama's foreign policy, it is multilateral engagement. And it's hard to see how you can do that without participating in multilateral trade negotiations as part of that approach. So that's what I see happening. And then finally, over the long term, the real challenges we face are building a trading system that is based on a multipolarity. And that's actually something we face in other global governance institutions as well. Actually, the current discussion, which has a lot of merit, is on the need for developing countries to have a bigger say. And certainly in the financial institutions like the IMF, that's going to happen. The supplanting of the G8 by the G20 is another sign. And in fact, it's already happened in the World Trade Organization, where developing countries are playing a major role. But that's difficult politically, but that's the easy part. The real challenges are going to be getting those group of countries to agree on things, when, in a sense, it's going to have to be done much more on a consensual basis, as opposed to the exertion of one player exerting their power. So I think we have a system whose construction is still going to be problematic. I've gone on too long, so I thought I'd better stop. But I'd be happy to entertain any other questions that you might have. Thank you.
I'm going to take privilege and go with the first one, and push you a little bit on grading the sort of the international cooperation policy response to the trade crisis. You mentioned one of the big things to have come out of the crisis, I guess, has been the role of the G20. And sort of notoriously now, I guess, amongst trade watchers, we had the November G20 meeting where they made two big commitments on trade policy. One was no new protectionism, and the second one was complete by the end of that year modalities for the Doha round. It took them 36 hours to blow the first commitment, which was when I think Moscow hiked auto tariffs, followed again by about 17 of the 19 country members. It took them 20-something days to blow the second commitment when Lowy announced in December 2008, sorry, we're not going to complete it by the end of the year. How do you rate how they've gone since, and what, if anything, do you think the G20 can do to sort of hold the line more firmly against protectionism?
Well, I thought the first meeting was disappointing. They didn't say they would complete the modalities. They instructed their negotiators to strive to complete the modalities, which already told you that they didn't think it was actually going to happen. And the definition of what is protectionist is, this is what I tried to indicate earlier, has a lot of wiggle room in it. And I mean, we all know it when we see it, and it's very clear. They've chosen a very legalistic way of interpreting it. So there is erosion or corrosion on the edges, and that is troubling. But I was more impressed in the more recent meeting, particularly by the ability of the developing countries to have their interests heard and met. And it wasn't just verbal, it was financial. I'm also so I think the last meeting was more impressive in terms of what it accomplished. I mean, an issuance of $250 billion of special drawing rights, another $250 billion in trade facilitation money. That kind of stuff is meaningful and I think was important. When it came specifically to trade, it was simply unrealistic to think that a lame duck U.S. administration was going to agree on modalities. Who was going to listen to them? Why would you keep negotiating at that time? Likewise, India's political situation was extremely uncertain at the time. We've now seen the Congress party come back to power much more strongly than they were before. And as I say, I think things have changed somewhat in the U.S. So it's still a very difficult environment. But I'm cautiously more optimistic than I was.
Yes, I'm Pat Ranald from the Fair Trade Network, and I just wanted to question the idea. I mean, given that we have seen an admission that financial deregulation went rather too far in the prior period, and that's part of the reason for the financial crisis. We do have to look again at what we mean by free trade, I think, because I think what we've had, particularly in the North American NAFTA model, is a very extreme version of what we mean by free trade, which has gone into areas like financial deregulation, government procurement, and a version which has been largely rejected by developing countries. They refuse to have an agreement about government procurement. I personally think that most governments want, for good reasons, to retain some options about government procurement, because it is about industry development and local development. It's an industry development tool. It's not just about protectionism. And in fact, the US retains those tools even when it signs free trade agreements. The US-Australia Free Trade Agreement procurement chapter has a very long list of US exceptions, and that's why it can still have Buy America policies. So I just want you to comment on that.
I agree that one size doesn't fit all. And there is this legitimate concern about policy space for developing countries. And this is a fundamental problem faced by the WTO, particularly in the Uruguay round, the last big multilateral negotiation, which was done as a single undertaking. My own view is that looking out into the future, a much better structure for the World Trade Organization would be one in which we had some core agreements to which all signed on, and others which were plurilateral in nature, like the government procurement agreement. I don't see why all countries, one of the great brilliant features of the General Agreement on Tariffs and Trade is that not all countries had to have the same tariffs. In fact, they could vary their tariffs depending on their local conditions. And I would say likewise, what we ought to have is an overarching system in which some countries who want to sign agreements that go deeper on foreign investment, or even, in my view, on intellectual property, that's how they should have done it, those who want to should sign those agreements. Those who do not want to, who do not think it's in their interest, should not have to sign all of the agreements. I think that would allow us to actually move further in the trading system to accommodate diversity in a much better way than a single undertaking. Because I think what we get with a single undertaking on the one hand is sort of lowest common denominator, and on the other hand, we impose on countries things which they don't want to do. When it comes to bilateral trade agreements, because you mentioned the NAFTA model, I think it's up to those countries. You know, let the buyer beware. The U.S. does go around the world, and when we negotiate these agreements, they're blueprints. They're not really negotiations. It's sort of, country, do you want to sign or do you not want to sign? Take the good with the bad. Yeah, you are, and I'm sure this is not some news to Australians. So I don't think necessarily that these are good agreements for all countries. I think it depends on what the country believes is in its own interest. But I would like to see a more pluralistic WTO system that could accommodate a lot more differences among countries.
Madeline Savitt, actually formerly of Harvard at one time. Question, a couple of forecasts. One is future of education as one of these high-end exports. In Australia, it's actually the third largest segment of the economy. I know the U.S., Harvard, and a lot of other institutions have outlets abroad. Do you see that growing and continuing? And also, do you think some of the recipient countries will eventually become the exporters of that same education, kind of recycled and putting it out there? There was just an article in Sydney Morning Herald about the business schools, actually the Asian business schools ranking fairly highly. Also, a little bit more of a forecast for South America, for Latin America, and whether they're strong enough and seem to be on the rise and will become, again, importing nations and whatever, or if they're just going to still remain at being exporters of commodities and whatever.
Well, on the first, I think, when I said America has to look at exports, it isn't just obviously manufactured goods, because services are very key. One area where we have been hurting our exports is actually in our relationships with Muslim countries, because quite a lot of the students who want to come study in the U.S., and I think it would be great for them to come study in the U.S., have been hindered in getting visas and entry. I hope the new change in the policy in that direction would allow them to do that. So certainly it's not just about goods, it is about intellectual services and other kinds of things which the U.S. has done very well. On Latin America, a key kind of question when it comes to their ability to compete in manufactures is what happens to the Chinese adjustment. If China actually moves to become more inwardly oriented, there is room for the renminbi to get stronger. That could be part of the process. Just as the United States becomes a bigger saver, we're going to see a weaker dollar. If we see a stronger Chinese currency, that could provide some wiggle room for developing countries, other developing countries, who have had a tough time competing with China in the US and other markets when it comes to manufactured goods. So a lot depends on how that situation evolves. Otherwise, it's going to be the commodities, and the primary commodities, which again would be generated if the emerging economies themselves are able to sustain their growth. So, and then I also had mentioned already, I was impressed by a survey that I recently read about the generally stronger fiscal positions in which those countries find themselves. One of my colleagues, Andres Velasco at the Kennedy School, is the finance minister of Chile. And he has had a remarkable record. He was bitterly unpopular because he prevented the Chileans from spending all of their copper revenue. And he built a huge reserve, doing everything he could to save. And he's today a hero in Chile because he's got the money and has been able to stimulate the economy now with that very prudent policy which he implemented. I think he's just the most dramatic example of the situation in some other countries.
Hugh Funder, Royal Bank of Scotland. How much sovereign debt is too much?
Well, it's what you can't sustain is the tautological answer to that. Polonius said neither a lender nor a borrower be, but he wasn't much of an economist. And, so debt's fine, as long as you're doing some sensible things with the money. And whether it's sovereign or whether it's private, there's no problem with debt if you behave sensibly. So I can't answer your question. It basically depends.
There we go. I'm Malcolm Cook, and I work here, and I'm the East Asia Program Director. I'm going to ask you for one last forecast. The largest free trade agreement the United States, bilateral or non-multilateral, has signed since NAFTA is the Korea-US FTA. Next week, I think Lee Moon-byak, is the president of South Korea, is going to the United States. What do you think the chances are that will move from signature to ratification anytime soon in the U.S. Congress?
I've spoken a lot as if I pretend to know the future, but one reason I'm at Harvard rather than on Wall Street is that I hate forecasting. And when you ask for a forecast, particularly one which has a date associated with it, that's even more dangerous. The issue is trucks. Basically, it all boils down to trucks in the United States. We have, in the U.S., we're a pretty open market, but we have 25% tariffs on trucks. Why do we have 25% tariffs on trucks? Only 4.5% or less, 2.5% on automobiles. It all goes back to the chicken wars. What do you mean the chicken wars? Well, in the 1960s, when the Europeans constructed the common agricultural policy, they shut out chickens from the United States. And so the U.S. decided it would retaliate. And they figured out that the way to retaliate against these Europeans was to put a big tariff on Volkswagen combis. And so they put a 25% tariff on trucks. They defined these combis, they were the trucks, and it was on a most favored nation or a most unfavored nation basis. And we've had these things ever since. Never gotten rid of them. And, what's happened to the combi? It's long gone. Who make the trucks today? This is why, by the way, the first foreign investors in the United States, when it came to the auto industry, all built trucks. This is why the United States, we think we have auto companies. We don't have auto companies, we have truck companies. Basically, General Motors and Ford, their big volumes are in trucks and SUVs because they're protected. So, it's a difficult time for Detroit, needless to say, and that creates a lot of problems in opening our markets to Korean trucks. So that's the problem. Now, we should put our money where our mouth is. This is a free trade agreement. It sure as hell should cover trucks, but that's the problem. So it's going to have to take move by the politicians, particularly the ones from Michigan and elsewhere, who are resisting the agreement. I think, by the way, there's a problem. We have 3 of these agreements. There's Panama, and Panama's problem is money laundering, and Colombia, and the Colombian problem is the killing of trade union leaders, and Korea is trucks, and each of them has this political issue which is impeding progress. I don't know what's going to happen.
Michael's promised me he's going to sneak in a very quick question, and then we'll wrap it up.
Quick question is about one thing that's more dangerous even than forecast, and it's personalities. You mentioned you worked with Larry Summers when he was Treasury Secretary. He was president of Harvard, of course. There's a lot of coverage at the moment about Larry Summers' role in the White House. Can I ask you to give a midterm grade on Larry Summers and President Obama's economic team?
These are all my friends. I think they've done a lot and impressively. I mean, I think if you just sit back and say, what's happened over the last few months, the amount of activity is huge and impressive. The strong, you can debate as to whether they ought to have gotten as involved with the auto companies as they did with respect to Chrysler and General Motors. They went further than I personally would have liked to have seen them gone, but they've acted decisively. They had a fiscal policy which I think left a lot to be desired. It had too many, for my taste, too much tax cuts and too many of spending items which are going to be hard to eventually cut. I would have preferred a much more flexible kind of spending package. But they have to work with Congress. And so you don't make that kind of legislation independently. But I would say in leading in those directions, in that area, I'd give them high grades, maybe a B+. I think when it comes to the banks, the verdict is still out. I think so far we have to give them an incomplete. because I was disappointed at the introduction of the first barrage of the scheme with Geithner. It was very poorly handled. They didn't have enough. The president over-advertised. He didn't come up with enough stuff. And the more recent program of using private money in order to buy bank assets, it's not clear that that's even going to get off the ground. So I think that's the weakest part of the program so far. And it's a very critical one, because until we straighten out the banks, our recovery is questionable.
Join me in thanking our guests for a terrific presentation.